We're back for another episode of I Hate Insurance with me, Parker Lindsey, and my dad, the boss, Rick J. Lindsey. He's studying his notes right now.
The topics we've been told to talk about are what an insurance buyer should be looking for when they buy insurance. You know, to me, it's very simple. I'm a consumer of insurance. And so when I buy insurance and what can happen does happen, I don't want to be pointed out the fine print or all the reasons that it doesn't work, they're going to go bankrupt, or they're going to cancel me for having a claim. And, you know, I joke with most people now, especially in Florida, and people that do have claims, you know, there's always some that they don't report or they report late. And you ask them, you know, well, why don't you report this stuff? And they're like, well, because they'll cancel me or increase my rate. And that right there shows that most people know their insurance is hanging on the thread, right? It's not stable. It's not true support. It's fake insurance. If you ever use it, it's going to go away. So real insurance, like people I've insured for 35 years, when they have a death case or a quadriplegic case or their, you know, brand new hotel gets hit by 2 storms like our insured in Florida, we show up, we pay the claim, we make it less painful, make it faster, and there's got to be value in that for insurance. Time is money. And then at renewal, we offer them a renewal because we don't look back on it and say, well, we were stupid. We should have got more money, or we shouldn't have insured them. And that's why many carriers now are canceling or exiting. You know, my whole career, I've been running in burning buildings, and people that are in burning buildings are great partners. You know, every other insurance company's running out of the burning buildings looking for, you know, customers that will never have a claim. And if, you know, that worked out for them, Chubb and AIG and Farmers and State Farm, all these carriers wouldn't be running out of the building and abandoning insureds that they've taken money for. So the short answer is look for a good partner when you're buying insurance, someone who will stick with you in the good times and the bad times. I refer to it as fake insurance versus true insurance. And, you know, it's a choice that the buyer has to make. And instead of, you know, getting quotes and picking the cheapest one, doing a mock claim and actually doing the math and saying, okay, so I buy this policy, and then when I have a claim, I reduce the value from $1 million to $800,000. So when the claims adjuster comes out, he's like, oh, you didn't insure to the proper amount, $1 million. You reduced it to $800,000 to save money. So now we don't pay your full claim. It's called a coinsurance penalty. And, you know, my answer to that is if you underwrite business, you really don't let people underinsure. You agree to the construction cost to fix or replace. If it's $300 a square foot, you can't let them insure it for $200 unless all you're interested in doing is selling them a policy and they're interested in getting the cheapest policy. And they're not interested in how that affects them in the event of a claim. So, you know, we at Prime and X Insurance for 35 plus years now have been, you know, trying to change the insurance world. Deductibles are something that the traditional market thinks you know, makes it a better risk because the insured's paying more of the claim. They just raise your deductible to where the majority of claims you're going to pay on your own. That's not a partnership. That's somebody trying to take your money and not pay your claim.
Or they exclude things like mudslide.
Or assault and battery or sexual abuse and molestation, or they give you GL but not professional. I mean, there's all kinds of, I call them cans of corn. Insurance companies design products that are supposed to work for them, like Gerber Baby Life Insurance. Now they sell Gerber Baby Life Insurance to anybody between the age of 55 and 85, guaranteed issue, And it's a mathematical can of corn that makes money for them because the limits are so low. So when limits are low, it's easy to manage that stuff. But as you get into higher values and people play games and lawsuits get bigger, the strategy of how you play the game can significantly affect the outcome of those claims. The pain, the amount spent. In most cases, insurance companies are trying to save money, and where we win, and we've won for over 40 years, is where we spend more money to do the right thing, fix it fast, fight the frivolous lawsuit, and then for the next 5 or 10 years, you're saving money because you made the right decision instead of making the wrong decision and fueling litigation.
When you're not saying we fight the insurance buyer as a homeowner, we're not fighting.
No, we go pay.
Claim. We're paying to get things fixed.
Yeah. But on the defense side, right, if you're being sued frivolously, insurers are trying to save money. They're trying to hire the cheapest lawyer. They're trying to hire cheaper experts. And when you do that, you lose cases you should be winning. You actually have to spend more money to be treated right? But that's an investment so that down the road, they can't sue you and you don't have to pay more. You're creating a precedent like we did with the case in 1988 we took to the Supreme Court and won, where all the lawyers said release forms are no good. Well, that means you have to pay everybody.
Even the lawyer going to court with you. You had to talk him into doing it. Now he claims he's the waiver expert, goes around the country saying he's the waiver expert.
He told me we were going to lose, and then we won. And then he wrote a book on how to do it. But he would have never been there. So, again, I still struggle with it today where, lawyers don't get it. And it's really the insured's job and our job as the insurance company to push lawyers to a better result. Every lawsuit I've won, thousands of them, I had to strongly encourage the lawyer to want to fight. And if they can scare the insured, then they're going to settle it because they don't really want to go to court. We try and hire lawyers that have been to court a lot.
They scare our own insured into settling.
Yeah, because they billed $300,000. Now you can settle for $1 million.
And they want to go on their vacation.
Right. So, I could have just paid the $1 million and never paid a lawyer $300,000. That's the key is you got to pay attention and you can't change paths midstream in litigation. So early on, you need to know about the claim. You need to get your foundation and your strategy, and then you need to stick together. The lawyer that I pay that represents the insured is 99% of the time, and in all my experience, after we've spent all the money and we're prepared to fight, they always want to settle on the courthouse steps. And we've had 6 of those in Florida this year, and we've won every one of them. The lawyers didn't necessarily want to go, but when the insured and the insurance company tell the lawyer we want to fight, that's how you fight. If the insurance company wants to settle, you really can't fight. If the insured wants to settle, there's no way you can fight. You have to settle. So it is a partnership. You have to make decisions. Most people form a captive because they think that's going to give them the power to tell people what to do. But when you have a captive, you don't have any power because you're renting an insurance company, you're buying reinsurance, and you're hiring all the same people that made it impossible for you to stay in business without forming a captive.
And you're going to get talked into by the lawyers to settle in the end.
Well, and then you're spending more money to not fight than you were spending before. So, forming a captive is old school. It's feeding, the brokerage side of the insurance business to be, beneficial to them, and insureds think that's what they want. What insureds need is a good partner that doesn't want to charge you more in fees up front, and we share risk like quota share reinsurers do. And, that's what I think is common sense. I can show you thousands of examples of how it works. I can show you of how it doesn't work when the lawyers are able to be like the bully on the playground and scare us. Plaintiffs' lawyers are the most outrageous guys on the planet. Defense lawyers are defense. They don't play offense. And when you're right and you're fighting a frivolous lawsuit, you have to have an offense. You can't play defense and think you're going to win. So partnership is what you should be looking for. And I know what I want. So the products I design and offer people, the custom fit solutions, are what I would want. People who buy, carry, conceal, USCCA or all these, firearms policies, most of them exclude if you're charged with a crime, which in America, you're innocent until proven guilty. And they've changed the contract to say we're assuming you're guilty, so we're not going to defend you. That's not insurance.
So even if you're charged, you have to go to defend yourself. They don't cover it.
They withdraw the coverage.
If you shoot someone, you're probably going to be.
There's a whole bunch of lawyers out there now doing prepaid legal or lawyer on retainer, talking bad about USCCA and all the self-defense policies. They're mainly called firearms policies, which we offer you a personal liability policy that we can issue just for firearms, but that's, not smart in my opinion. We want to cover you for your firearm, your dog, your ATV, things you rent, anything that could happen to you, and we make you list. I can't cover something you don't tell me about. So your work, your home, and your play. Those are the three areas of your life that insurance doesn't cover. Your business policies cover your business and exclude personal. Your personal policies exclude business. And if we issue you a commercial auto policy and you use the car personally, we include personal use. That's how you customize it. Nobody else does that stuff. If you have a dog or firearms or you're a jiu-jitsu, black belt, you have no coverage. You tell us that, you're covered 24/7, 365 days a year for anything they allege you did. It's not, insurance companies cannot provide coverage for a criminal act, but you're not guilty until proven guilty. So real insurance has always defended you until you're found guilty, and then the contract stops. And they're actually supposed to try and seek reimbursement for the defense costs. But if you're guilty and in jail, the insurance company's never going to get their money back. So when it happens, do a mock claim. When you're buying a policy, do a mock claim. How is this going to work out? I can do it with you if you have a tough time doing it. I've handled, 400,000 claims in 40 years. So it's about experience and a track record of better outcomes. If it's your home or your property and it's a first party loss, it's a loss to you. We're going to show up and work with you to get it fixed as soon as possible the right way. If it's litigation, we're going to fight for you as hard as you want to fight. If you tell me to settle, I'm going to settle. But that's not what I do. If I'm right, I never settle. If I'm wrong, I should have already settled. So you have to change your habits of not reporting claims, which means by admission, you don't have good insurance. Be like hiring a lawyer on retainer and never calling him. You wouldn't do that. So why pay for insurance you think you'll lose if you use? So make a better decision. Look for value, not cheapness.
I think we covered all the topics. I think there's one thing about a melting wax guy you were mentioning.
Yeah.
What about the melting wax guy?
Oh, I just think all of these insurance ads with Mayhem and Liberty Mutual, only pay for what you want, and they're insulting to me, right? Buyers of insurance, they're kind of funny, right? But when you look at it, letting an insurance buyer, a novice, only buy what he thinks he needs. A fiduciary is supposed to protect you and tell you what you don't know. and tell you the best way to do it, not let you buy coverage that looking backwards, you're going to be sad that they let you buy what you need. But
what you think you need.
And they don't know. So anyway, it reminded me of the Wizard of Oz when the Wicked Witch of the West gets water thrown on her and she melts. And he's standing there. He thinks he's saved enough money on his insurance that he had a wax copy of himself made, and he's proud of it. And it's hot, and the Statue of Liberty's in the background. And he starts melting the wax figure. And I think that's hilarious because that's what their insurance does. It wilts or melts under any pressure at all. Long as you just pay them and they never hear from you, yeah, it's all good to go. But the minute you actually need them, to me, it's the funniest
It's
one.
the Wax Man story.
Yeah, it's a disappearing
away.
policy.
So if you want real coverage, you know who to contact. You can find us on LinkedIn, Instagram. If you want to watch RJ go live, Rick J. Lindsey 74 on Instagram, he'll be live. So if you have any questions, let us know. Send us a direct message or call the office, 801-304-5500.
Or you can email me at rjl@xinsurance.com. I prefer email. I'm kind of old. I don't go to the post office anymore, but email is still my preferred method of
But he
doing
does answer the
business.
phone 24/7. So email or phone. He talks on the phone a lot too.
Call anytime.
Thanks, guys. See you next time.